Paramount CEO Bob Bakish leads one of the world's top media and entertainment companies with a powerful collection of brands from CBS, Showtime, and Nickelodeon to MTV, BET, and Comedy Central, and not to mention one of the most storied Hollywood studios, Paramount. The media and entertainment industry is going through a complete rewrite with quote-unquote new normals triggered by COVID-19 and shifting consumer demands. Bob Bakish joins us now to discuss that and so much more. Bob, thank you so much for being here.
Great to be here.
All right, I want to start first with streaming and Paramount Plus. We've seen this roller coaster focus on profitability, the subscriber slowdowns, but Paramount Plus, they've been killing it. 43.3 million total subscribers. In your view, what has Paramount Plus done right, and what do you think it still needs to work on to be in that top of the streaming wars?
Yeah, so we're thrilled with the performance of Paramount Plus. And when we launched the product a year and a half ago, and it was a rebranded version of CBS All Access that we built on and expanded, people said, you're too late to the party, you're too small. And we looked at it and we said, well, wait a minute. We think there's an opportunity in the marketplace for a broad service, and we think that really leverages our unique portfolio of assets. So we came to be news, sports, and a mountain of entertainment, and we put really the weight of the whole company behind that. And since then, through a strong content, through marketing, which leverages our platforms, through a tightly integrated distribution strategy, we went on to become much bigger than anyone thought. And in fact, if you look at 2022, we've led the industry in the US in subscriber additions every month this year, except February. And in February, one of our competitors had the Super Bowl and the Olympics, and okay, we were number 2 that month. But other than that, we've been number 1. So we're growing very quickly. And we're extremely happy, and we see a great road ahead for this service.
And you confirmed earlier reports that there are talks to potentially combo Paramount with Showtime. Have those talks advanced in any way, especially with the departure of David Nevins?
So we're focused on developing a compelling consumer proposition and, by extension of that, a compelling distributor proposition. And when we launched Paramount Plus, at the core, we said our advantage is broad. So, and when you look at that, every month we prove that right. The combination of news and sports, having the NFL back is awesome, having UEFA is awesome, mixing that with Paramount films, which, by the way, we've had 6 #1 films
I want to talk to you about
this year.
Yeah.
Adding the fall to slate with CBS, which we won 5 of 7 days last week, and we have the top 1, 2, and 3 new show. And then, of course, adding a robust library and ongoing production from our cable networks. It really is a compelling combination. With vis-a-vis Showtime, we use Showtime in a number of ways. Internationally, it's integrated into Paramount Plus. We felt that was the right way. We didn't have a standalone Showtime, if you will, linear service. So the brand wasn't quite as developed. We thought that's a compelling proposition. In the US, you can buy Showtime separately, OTT versus Paramount Plus. It obviously has a linear service. It has a well-developed brand. And we're happy with how it's doing on a standalone basis. A while ago, we introduced a price bundle, which was you can have Showtime and Paramount Plus together at a modest discount. And we're pleased with that. Last month, we introduced an app with Paramount Plus with Showtime inside as an option. So instead of a price bundle, you now have one app, and you get the benefit of the Showtime content should you choose. We've been very happy with the take rate there. And I can tell you, I use that version of the Paramount Plus app, and it is, yet again, another proof of broader is better. As seeing those Showtime, whether it's the originals or some of the movies, in the carousels mixed in with the other Paramount Plus stuff really works. So again, what are we focused on now? We're focused on how do we make a more compelling consumer proposition, and how does that aid in getting distributors even more behind our product. So we're looking at optionality, and I don't know exactly where it's going to go, but I can tell you our product will continue to get stronger, it'll continue to evolve, and that'll bring down churn, and it'll continue to grow the sub base.
Are you using those bundled offerings that you were just talking about as a sort of test to see what a combination service could bring to the market?
Well, absolutely. We're getting more data every day on Paramount Plus on a standalone, what works under the covers, how does sports content interact with films, et cetera. We're seeing how the bundle performs on a price basis. We can look at variability in pricing. So yeah, we learn more about streaming every day, and that informs our going forward plan.
You mentioned pricing. I want to pick up on that. Pricing has gone up for a lot of these streaming competitors. We got the news recently that the Netflix ad tier that's going to be $6.99 in the US. Where's that sweet spot for you when we think about pricing relative to competitors, but also wanting to make sure that you're not leading to increased churn?
Yeah, sure. So a couple points on pricing. One is streaming represents an extraordinary value in general for the consumer. Point two is within that, Paramount Plus is not the price leader. We are very much a value offering. We tuck in under, say, Netflix, under HBO Max, et cetera. Point three is, in general, and you've already seen this start to happen, streaming pricing is going to go up. One of our competitors just announced a 30% price increase. Netflix has raised price multiple times. So the price umbrella on streaming will go up, and we'll tuck in under that, and we will raise price as well. Can't tell you exactly when that'll happen, but directionally it's going to happen for sure.
So do you say you're watching competitors pretty closely when it comes to their pricing? Does that factor into your decisions?
We look at a lot of things. We look at the performance of our product with our consumers. We look at what competitors are doing. We obviously look at what's going on outside of streaming. All that gets factored into our decision making on our course of action for streaming and the business at large.
And when we think about content, you were mentioning sports content. Obviously, Paramount Plus has a ton of kids content, but there still seems to be a need for this buildable franchise type of content across the sector. So what do you think will be key for your content strategy moving forward?
Well, you just hit on something, the word franchise. One of the things that Paramount Global brings to consumers is a deep collection of franchises. And it's certainly core to our strategy in general and with respect to streaming to leverage that. Look at our Paramount film slate. They're more and more tilted towards franchises. Why? Because they have built-in fan bases and you can evolve the storylines. Same thing in linear television. Franchise. Look at CBS this season. FBI Night crushed it, multiple FBIs. NCIS crushed it, multiple NCISs. So franchises are key. In the kids space, Paw Patrol. We did our first Paw Patrol movie last year, killed it. We're doing another one next year. SpongeBob, we've done derivative product from that. Camp Coral, et cetera. And then, of course, Yellowstone, the biggest show on television. We brought the world 1883 last year. We're bringing it 1923 this year. And actually, we're doing some more stuff with Taylor Sheridan, who's the writer of it, including Tulsa King with Sylvester Stallone. Franchises work, and we have an incredible collection of franchises in our company. So yeah, they're part of our streaming play for sure.
And besides streaming, you guys have also heavily invested in some unique partnerships, the Walmart Plus being one that immediately comes to my mind. So what's the benefit of a partnership with Walmart, and what other types of partnerships are you actively exploring?
So we've been in business with Walmart for a long time. You know, we sell consumer products with them. We distribute home entertainment with them. I know Doug McMillon, the CEO, well. And there was a point, I guess it was last year, where they started thinking about the evolution of Walmart Plus and having a video service. And we were naturally interested in expanding that partnership. And it really is a partnership. We're not investing in Walmart Plus per se, but we are the video offering in it. So if you're a Walmart Plus consumer, and you decide to opt into a video service, you get Paramount Plus. And we think it's a great model. It's early days. It launched in September. But we're already through what we thought would be our year-end forecast number. And that it is a tremendously powerful retail. They have 140, 150 million people going through their stores in the US every week. And then they got about 1.4 million employees. All of them can opt into Paramount Plus. So we're thrilled with the partnership, and it's off to a great start.
And let's talk box office. You mentioned your successful film slate several times. In this environment, how do you determine which film can go direct to the theater or which film you might want to go direct to streaming on Paramount Plus?
Well, we had a different point of view on films and streaming going back to COVID and going back to Paramount Plus. When COVID hit, a lot of people said you should put all your films on streaming, or at least day and date on streaming. We said no. We believe in the theatrical window, and we believe in it both to give the audience the chance to have that big screen experience and participate in those economics, and then we can move to streaming. So we adopted what's known as a theatrical and 45-day fast follow to streaming strategy. That's our default strategy. And because it was in COVID, that resulted in us holding certain films. As a result, Top Gun Maverick, we moved that date 5 times because we said this is a big screen movie and it should be in the theaters. And I'm glad we did, because that turned out to be a good call. I think the theatrical with 45-day fast follow, which by the way, on Top Gun, we're going a little bit longer than that by the nature of the film. 20 weeks later, it's still in theaters today, and it was the only film in history to be #1 on Memorial Day and #1 on Labor Day. So, and having a longer theatrical run makes sense. But in general, we like that strategy. I think that's the sweet spot of ROI, particularly with respect to films. And that is very much our going forward strategy with Paramount.
Yeah, so with Top Gun, you guys demonstrated your ability to pivot. I want to talk about the Wall Street sentiment of it all. There seems to be a lot of doom and gloom right now. You're a bit more optimistic, but when we take a look at Paramount's stock price, it's down more than 40% year to date. You have some downgrades on the street. How do you convince analysts and investors that these macroeconomic headwinds, the decline of cable television, the uncertainty surrounding streaming margins are not concerning to your fundamentals?
Look, I don't think there's a lot of people walking around that's happy with the state of the markets. I mean, they're up today, but in general, it's been a rough half year with respect to equity valuations and certainly our company stock. Worth noting on a relative basis, relative to some other media companies, we've actually done better, i.e. less worse. But nonetheless, there are concerns on the street. There's concerns relative topics. My view is you have to decide what you believe in and play through. As I said, in theatrical, people said, release it direct to streaming. We said, no, we want to do theatrical and then streaming. When we did Pluto we closed in early 19, we showed up and talked about it. People said, what's that? That's a joke. By the way, it had 12 million MAUs and 70 million in revenue. 3 years later, it had 70 million MAUs and over $1 billion in revenue. And now everybody's like, whoa, this fast category is really cool. But if you listen to the street and you listen to others, you would never have done it. So you have to decide what you believe. The two concerns in the street right now are advertising and streaming profitability. Advertising is a great business, and we have a fundamentally strong position in it. Our combination of linear reach, particularly with a broadcast network, plus the #1 fast service in the country in Pluto TV, gives us a great reach expression for advertisers. Add to that, it's all wrapped around great creative content that people love to be associated with, NFL, Survivor, FBI, Paw Patrol, what have you. Add to that advanced ad capabilities and an ability to do all that business on a turnkey basis. It's a fundamentally compelling proposition, and we will demonstrate it again. Second question people are worried about is streaming profitability. We've always had a plan to build a robust streaming business, but a profitable streaming business. Our business is only a year and a half old. It takes a little while. We always said peak investment year is 2023. It still is. But we are building a business that we see as over time having TV media-like margins. And we are tracking according to our plan. So are there concerns on the street that have negatively impacted valuations? Yes. Do we have to play through and deliver and continue to have the momentum we're showing? Yes. And ultimately, that represents a great value opportunity for people.
All right, well, you heard it here. Thank you so much, Bob, for covering all those topics with us. Bob Bakish, Paramount CEO.
Thank you.